Hey everyone, and welcome to this Premium Explainer. I am absolutely thrilled you're here today. We are going to build some profound conceptual clarity for Chapter 2 of the NISM Research Analyst exam. We're breaking down the hardest, highest yield questions, and we're going to move way past simple textbook definitions to truly understand how these financial instruments actually work in the real world.
We'll keep it super simple and use a rapid-fire format for all these questions. You'll see the question and the options on screen, and we'll hit you with short, crisp explanations to really test your knowledge. Let's jump right in.
Section 1. Securities Market Basics.
Question 1. What are securities? Is it physical goods, transferable financial claims, only government bonds, or bank deposits? The correct answer is B. Securities are transferable financial claims, think shares or bonds, that literally convert our savings into working financial assets.
Moving to question 2. Which of the following is not a security? Shares, bonds, derivatives, or an insurance policy? The answer here is D, an insurance policy. Since things like insurance policies combine both insurance and investment, they are officially excluded from the standard definition.
Question 3. The primary market deals with trading existing securities, issuing new securities, speculation, or arbitrage. It's B. The primary market is strictly the place where companies issue brand new securities to raise fresh funds. It's totally separate from everyday trading.
Okay, so question 4 directly contrasts that. The secondary market enables creation of securities, trading of existing securities, loan issuance, or currency exchange. Well, if primary is new, secondary is existing. The answer is B. It provides the liquidity you need to trade those already issued securities. Question 5. Equity shareholders are creditors, owners, lenders, or regulators? You probably know this one. The answer is B. Equity shareholders are the actual owners of the company. They're the ones bearing both the risks and the rewards.
Section 2. Markets, Indices, and Funds.
Question 6. Debentures are ownership instruments, debt instruments, insurance contracts, or commodities. The answer is B. They are debt instruments. They represent borrowed capital, where investors are basically acting as lenders to earn a fixed interest rate. Question 7 is a quick acronym check. ETF stands for Exchange Traded Fund, Equity Transfer Fund, Electronic Trade Fund, or Exchange Term Fund. It's A, Exchange Traded Fund. These trade on exchanges exactly like stocks while tracking a specific index. Question 8. Which index represents the NSE? Sensex, Nifty 50, Dow Jones, or NASDAQ? The correct answer is B. The Nifty 50 represents the National Stock Exchange, whereas the Sensex is the benchmark for the BSE. Question 9. Mutual funds provide guaranteed returns, diversification, zero risk, or no liquidity. No such thing as zero risk, right? The answer is B, diversification. Mutual funds significantly reduce your overall investment risk by spreading your money across multiple assets. Question 10, another essential definition. IPO stands for initial price offering, initial public offer, investment public option, or internal public offer. It's B, initial public offer. This is that huge moment, the very first time a company offers its shares to the public. Question 11. Which statement best describes the function of the securities market? Only capital raising, only trading, transfer of savings into investment, or tax collection? The answer is C. The whole shebang really comes down to efficiently channeling savings from regular investors into productive investments.
Section 3. Debt and Global Instruments.
Let's spot the odd one out for question 12. Which is not a component of a financial market? Investors, borrowers, intermediaries, or manufacturers? It's D. Manufacturers make physical things.
They aren't core financial market components like investors or intermediaries. Question 13. Fully convertible debentures. Cannot convert, convert partially, convert fully into equity, or only repay principal. It's right there in the name. The answer is C. They completely convert from fixed income debt into ownership equity.
Now, listen up, because this is a classic exam trap. Foreign bonds and Eurobonds. A foreign bond is issued in a foreign country, and it perfectly matches that local currency. But a Eurobond, that just means there's a currency mismatch, like a bond issued in Germany but denominated in yen. It has absolutely nothing to do with Europe. Keep that in mind. Let's test that immediately with question 14. Foreign bonds are issued in home country, issued abroad in local currency, issued abroad in foreign currency, or same as Eurobonds. Applying what we just learned, the answer is B. They are issued abroad strictly in that market's local currency. And perfectly following up in question 15, Eurobonds are issued only in Europe, issued in currency different from country of issue, issued by EU governments, or same as domestic bonds. The answer is B. They are issued in a currency completely different from the country of issue. You're not going to fall for that trap anymore.
Question 16. Masala bonds transfer currency risk to the issuer, investor, bank, or government. The answer is B, the investor. Because Masala bonds are denominated in Indian rupees but issued abroad, the investor bears the risk if the rupee happens to depreciate.
Question 17. Warrants provide ownership, obligation to buy shares, right to buy shares, or guaranteed dividend. The correct answer is C. Warrants provide the right, but absolutely no obligation, to buy shares at a fixed price sometime in the future. Question 18. An index is mainly used as an investment instrument only, market benchmark, government policy, or tax tool. The answer is B. An index, like the Nifty 50 we talked about, is mainly used as a performance benchmark. It helps you measure market sentiment and compare returns.
So here's the real question. You've powered through this rapid-fire set, and you've clearly got the Chapter 2 foundational theories completely locked down. But are you ready to test your mathematical skills on the risk calculations waiting for you in Chapter 3? Review these concepts, stay sharp, and I will see you in the next explainer.